Hello agents, hello everyone. So today we're going to take a look at the MYGA rates by rating of the carrier. So let's just jump right into this. MYGA rates by ratings. This is as of today, November 7th, 2025. Rates are subject to change at any time, of course. And you got to watch those treasuries and other yields to kind of understand where we're going to go. So here we go. Rates by ratings. I did an A plus category, A minus, and a B plus plus company. And as you can see, the rates are higher on the B plus plus and lower on the A plus, right? A plus are superior. A is excellent, A minus excellent, and then B plus plus is very good. These are the AM best. You can check out ambest.com if you want more information on these. But as you can see here, the 3 year is at 480 on the A plus company, and you're at 580 on the B plus plus. So what it is remember, MYGAs are just insurance. You're just buying insurance, right? So the higher the quality or the more insurance you buy, the more expensive it is. And in the case of a MYGA, the more expensive would be the lower yield, right? Because you're buying more insurance, more protected carrier you're buying. It costs a little more off the rate to get that extra security. So it's just you're buying extra insurance. It's super extra safe than the B plus plus in theory, right? So yeah, if you're doing large premiums or you're well above the limits on the certain, guarantees, you may want to look at a higher rated carrier. And then right now, as you can see here, it's like the A minus category is like right tying some of the B plus. It's above most of the A and A plus. So this is like a sweet spot. They're 3 years up to 545. You have up to 570 on the 535 for the grouping of the rest. So 535 on a 10 year is pretty good. I think that's like 68% or so after all is said and done, if you leave it to accumulate for those full 10 years. So anyway, as you can see here, the breakdown just by rating. So if you want to diversify, you can go and you can see basically the spread there. But on the 5 year, you're talking about, from the best B plus plus to that is about a 1.3%. So that's pretty big, spread, for the extra quality there. So these are basically on the 5 year chassis. That seems to be the hot bucket right now is the 5 year. So anyway, that's just how it breaks down. MYGA rates by ratings. It's insurance and you kind of pay more insurance, get a little lower rate, take a little more risk, get a little bit higher rate, right? So that's how that works. I have a MYGA calculator on our website you could go to. It's at annuityexperts.com. And you just go ahead and highlight that MYGA rate. Go ahead and click on the fixed annuity calculator right there. And then you can go on the MYGA calculator is the top one. But also I have just a regular compound calculator to lay out all the years there. So this one's assuming 100,000 on the 7 year at 535. You see it grows to 144, earns $44,026. Of course, all these assume we don't take any withdrawals out of them. So anyway, this is the calculator. That's the link to that page we just looked at. And you can also do illustrations if you want me to run an illustration actually from the carrier. Some of these carriers got really good illustrations and you should use them. It talks about the minimum guarantees, all the product features, all that good stuff. So it's actually a pretty useful tool, more than like a calculator. Some just have like a calculator, but other carriers will do like full multi-page illustrations, even do some annuitization factors for you on the worst case scenarios. So it'll break down all the, the guaranteed, the non-guaranteed, the hypotheticals, all that good stuff for you, tell you a little about the carrier a lot of times. So you can request one of those by visiting Annuity Experts, Deferred Annuity Illustrations, and go ahead and fill out as much as this as you can. That way I can do a good job and put your email. Or feel free just to give us a holler, give us a call. We're happy to work you through an illustration like that. So yeah, MYGAs, remember, multi-year guarantees, this type of fixed annuity, usually from 2 to 10 years. Most things you want to be aware of are the surrender charge at market value adjustments. So that's if you leave early. That's the only time those two come to play. So really, if you're looking at these, consider them non-liquid, that you don't really want to take any money unless you're going to do one like stripping the interest or something. But if you really look at them as, non-liquid products and buy them that way or sell them that way, these surrender charges and market value adjustments are pretty much not a issue because you're not going to violate the contract. You're going to keep the agreement you made with the insurance company. Of course, there's a tax on the gains or it's fully income taxable. Withdrawal options vary. Some companies have none. Some allow up to like 20% cumulative. Renewal terms, some are walk away where at the end of the term, you don't have to make a decision. You could sit there and earn whatever the current rate is and leave whenever you want. Others give you only like 30 to 45 days, make a decision, or they're going to lock you up again. No suitability, no new apps. They just lock you up again. So, and then remember, the whole thing is based on the claims all the guarantees are backed by the claims paying ability of the insurance company, and that's why we get into the ratings here. So not only, it's not necessarily like an A company would be better than a B. You just got to look at each company and their ability to pay claims. This is just what AM Best is. There's also other rating agencies like Weiss and S&P, so you can get more detailed. I just do this as the one most people talk about. But yeah, so that's that. Here's some disclosures, 59.5 rules, all that good stuff for annuities. Hey, that's the end of my presentation. Thanks for watching. I hope you're all having a good week. And yeah, if you need illustrations, give us a call. Rates by ratings. Remember, this is just insurance, and the more insurance you purchase, the lower the yield or the more expensive it's going to be. So, YouTube, LinkedIn for the most up-to-date information. Thanks for watching, everyone. Take care. Have a good day. Bye-bye.